Welcome back to Yahoo Finance Live. All three majors continue to hang on to their gains here, although just slightly, with the Nasdaq trading pretty flat. The Dow is up 59 points and the S&P 500 up 12. Of course, a lot of investors bracing for what could be a choppy month, September typically being quite volatile. Let's bring in Jared Blikre, who's tracking the very latest for us post-labor market. And Jared, we're going to get to what we anticipate normally from a typical September, but let's start by talking about the currency moves.
Yes.
It is incredible to see where the Japanese yen has gone.
Yes, and we're kind of speechless here. You're going to see these moves on the Wi-Fi Interactive, and maybe you'll say to yourself, 1 2/3%, is that really a big move for the U.S. dollar versus the Japanese yen? On a daily basis, that is huge in terms of currency terms. That is because a lot of these trades, in fact, not most of them, are highly levered. At 10 to 1, I think that would be a conservative estimate. So when we see these outsized moves, and let me put a year-to-date chart on the yen, we typically don't see currencies trend this much versus each other. They tend to trend sideways or go in bands, but this is something, when you see a big breakout, you have to take notice. Let me put a max chart on here. Now, this doesn't go back to the beginning of the relationship. This goes back about a little over 20 years. Now, you would have to go back even farther to see where the U.S. dollar is versus the yen. And so anything going higher means the U.S. dollar is getting strength and the yen is showing some weakness here. So we have surpassed this high right here, which I believe is 1999, 1998, and we're in those 1998 levels. Not showing you. You go back a little bit farther, we're going to head into 1987 territory, and it quickly devolves from there. All of this to say, the strengthening U.S. dollar, and it's strengthening for a couple of different reasons here. First, we have higher interest rates, and then second, we also serve as a haven, a safe haven. So when we see money flowing into the U.S. dollar versus all these other currencies, and here's the yen by comparison, my concern is that when the BOJ, the Bank of Japan, has to blink, has to change course, it could be a huge disruption in the markets. That spills into over into everything, including equities here, Kiko, that we've been talking about.
And we haven't even talked about the euro at 99 cents to the dollar. Obviously, the ECB meeting later this week, we'll see where things go from there. Let's talk about the markets here, though. A lot of investors have been kind of bracing for the choppiness to come, given the reputation for September. What can we expect?
Well, I think when we begin September, it's always back to school time. Traders go back to their trading desks. And let's go back to the Wi-Fi Interactive. I do have a little bit of time to show some of the seasonality stats, but we don't have earnings season until basically the third week of October. So here's Callie Cox, who we just saw on our program, but she tweeted this a little bit ago. This is the S&P 500's average return since 1950 by month. So this goes January, February, a little bit negative, but here's September, down 0.5%. I think that speaks as to what we're seeing in the markets right now. We don't really have a catalyst until we get the CPI numbers in a couple weeks, until we get that Fed meeting in 3 weeks. So until then, we're kind of in no man's land. We could go down a bit, we could go down a lot, we could rally a bit, and I don't think it's going to make much of a difference until we get some of those key numbers later.
Yeah, not a whole lot of comfort there, right? I mean, given we're 3 straight weeks of declines now is ready as well. The Fed not meeting until later this month, so it really is going to be sort of like breaking through the data to see what exactly the next step is going to be.
Exactly.